Hello everyone and welcome back to my YouTube channel. So today we will be talking about external economic influence on business activity from the 9609 syllabus code. So let's start. First of all, what are the external economic influences? These are all economical factors, or these can be any decisions also of economy that influences business activity. That influences business activity. Okay, what are external economic influences? These are all the economical factors that influences business activity. For example, these can be taxes, subsidies, and much more. So first of all, let's go towards the positive side of this. Government support for business activity. Government support for business activity are usually included loan guarantee schemes. So what are the government funded schemes that the repayment of certain percent of bank loan should the new enterprise or small business fail? These are government funded schemes that guarantee the repayment of certain percentage of loan. For example, if a small business started but it is failed due to many reasons like poor coordination, weak market research, or much, so the bank, so the government will pay the bank loan that they have taken, including the interest rate of a certain percentage of bank loan. If small business fail. Okay. Second, they may provide information, advice, provide information, like they may provide how to do market research or training schemes, advice to entrepreneurs through government industry departments and local colleges. And training schemes for entrepreneurs. This can be through many mediums, again, like colleges, through industry departments, or anywhere through which the entrepreneur get to know how to run the business and how to make it successful. The most important comes now. Cutting rate of profit tax, that is also known as corporate tax. When the rate of profit tax will be reduced, this increases retained profit. That helps the business to survive even in difficult times. It can also help the business for expansion, but for a failing business or a small business, it increases retained profit, which help to survive. So if a question related to this government support for business activity comes, so it would like mostly come for 8 marks in P1. So you have to explain these 3 points very well. If you have any other points, you can also explain, but the points should be valid. If you explain these 3 points very in detailed, so there are chances of getting 6 to 8 marks or maximum 6 to 7 marks easily. Now comes the second, how the government deal with the market failure. How government deal with market failure. So first of all, actually we need to know what is actually the market failure. Market failure occurs when underproduction. You need to explain more in detail, but I'm telling you very precise that helps you to remember the full definition. Underproduction of merit good and overproduction of demerit goods. If I entered in detail in it, so we will little bit enter into the economic section, but we don't have to remain in the business area. So market failure occurs when there is underproduction of merit goods and the overproduction of demerit goods. What are actually the merit goods? That has a positive externalities and positive impact on the economy. And what are demerit goods? That have a negative externality and negative impact on the economy. So what are the reasons for what are the types of market failure or the examples of market failure? Like what would cause a market failure and the effects of it? External costs most occurring. Let's go through it with example. For example, external costs can be pollution from a manufacturing industry that may cause external cost. What can be the external cost from it? Like it is giving the harmful gases that leads to the asthma problem or any health problems. Noise pollution from the factories. The residents living near can get little disturbed. So actually, when the case study is given, these act as a application. These act as a application or plus knowledge. So this is a plus point if this chapter comes and related to external cause. So in a 12 marks or 20 marks, this act as application plus knowledge. So well, if we talk about what is application, so it is a detailed examination format for 9609 business. We will make another video for it of what is the syllabus, how to attempt paper. We are not going in discussion with that. Okay. So external cost are the pollution from manufacturing and noise pollution. So first of all, you have to also remember what is external cost. The cost of an economic activity that are not paid by the producer but by the rest of society. Pollution occurs, but producer is not paying. Rather, the people living there or people passing through, they will experience a bad breath. Simple. Okay, now comes the examples of market failure other than external cost. Very interesting. Monopoly producers causing market failure. Who are monopoly producers? Businesses leading the market. Simple. They are only the sole producer and the sole supplier of that product, and consumers are buying from them. They are not even looking at the competitors. So, this is monopoly. businesses that are leading market. If in detail I explained you, this is a short what what are monopoly producers. Okay, so first of all, if we go into the monopoly producer, how it affect consumers. Lack of choice to consumers. For example, if there is a coffee brand and they are only the ones who will produce of the coffee, and they're only producing cappuccino, so the consumers like americano, espresso, they're not there, so consumer will have a limited variety of choice. That leads to the market failure, as consumers will not purchase and the business will not be able to run, leading to the market failure. So in this case, what will the stakeholder do? Means the shareholders in the businesses, what will do? Shut down the business. Simple. They have no other options. They shut down the business, supply get lowers, demand raises, but there is no supply, leading to the market failure. If we little talk about the diagram, as the demand rises, supply falls, you can see there is no effective price. This is like there is no such diagram for it. This means there is a market failure. Simple. Okay. Macroeconomic objectives of government. So, macroeconomic objectives of government. So, what are the macroeconomic objectives of government? These are the objectives that a government held for the whole economy, that will benefit the whole economy. That includes economic growth. If we go little deep into it, so what is economic growth? Rise in GDP. That can be due to many reasons: rise in employment opportunities, rise in business activity, rise in trade. Anything that will raise the aggregate demand leads to economic growth. Simple. Rise in GDP and most probably rise in aggregate demand. Simple. Okay. Then comes low price inflation. Low price inflation. What is this? The rate at which consumer prices on average increases each year. Low price inflation leads to higher demand because purchasing power rises. Purchasing power rises. Business confidence rises. Business confidence rises. They may also in future lead to higher prices if there is an inelastic demand. So higher profit. That leads to many such benefits like rise in employment opportunities, rise in entrepreneurship. That leads to higher trade, increasing GDP, and much more. We will go deep into it. So, like, it is on a low rate of unemployment. That is also low rate of unemployment. There's a simple reason for it, due to rise in entrepreneurship as business confidence rises. Simple. Rise in entrepreneurship, there will be low rate of unemployment as business will require more employees for what? Long term BOP. Long term positive BOP. Balance of payment. What is actually balance of payment? The difference between the value of imports and value of exports. So when export rises, imports fall, positive BOP. And the last but not the least, exchange rate stability. Appreciation. Simple. Rise in price of currency in terms of another currency. For example, $1 is equals to 5 rupees. Appreciation occurs. $1 is equals to 2.5 rupees. What actually appreciated? Dollar. So this is called appreciation. So now comes how economic objective and performance impact business activity. Economic growth means a country is becoming richer. It is measured by increase in GDP. So actually GDP is measured in the monetary terms and inflation will raise the value of GDP. Such economic growth occurs when the real level of GDP rises as a result of increase in the physical output of goods and services. So if we go in the negative side of it, recession. I didn't like explain it in detail because it is not that important, but recession very important. What is it? Declining decline in GDP over two consecutive quarters. GDP is rising steadily, very rapidly. This is called recession. For example, 2.5% GDP, suddenly 2%, and very like in 2 or 3 did it become 1.5%. So fall in two consecutive quarters. This is called recession. Okay, then what are actually benefits of economic growth? They are simple. That is actually